Hello and welcome to Ticker Tapes. It's Monday, so that means FAANGs are on the agenda again. Last week was one that equity investors will wish they could forget. The S&P 500 index lost 8.74%, whilst the Nasdaq 100 fell by 9.31%. Why? Well, for the very reasons that we have been talking about over the year to date, namely fear about what a combination of higher inflation and higher interest rates will mean for earnings and stock market returns. We had the higher inflation print on the 10th of June and the confirmation of higher interest rates on June 15th, when the Federal Reserve hiked rates by 0.75%, effectively ending a 13-year period of easy money and benign financial conditions. Markets are driven by investor sentiment, which swings between periods of extreme greed and extreme fear. The latter very much describes the mood of markets right now. Meta Platforms' stock price lost 12.57% last week and is now down by more than 52% year to date. The transition to the metaverse and away from traditional social media was never going to be straightforward or happen overnight. However, sentiment towards the stock continues to be extremely negative. For example, Meta has posted 29 new lows year to date, and the stock now stands on a forward PE ratio of just 12.8 times earnings. Meta makes money. It reported annual sales of $117 billion and an income of $39.37 billion in the last year, yet it now trades at less than 4 times sales. It's due to report on July 27th. Wall Street estimates are for EPS of $2.59 per share, and the consensus price target for the stock is $294, yet Meta Platforms currently trades more than $130 below that figure. Even the world's second biggest company, Apple, wasn't immune from last week's sell-off. The technology giant's weighting in the Nasdaq 100 and S&P 500 meant that it probably saw more than its fair share of selling, simply because it acts as a proxy for both indices. Institutions and pro-traders looking to go short of equities or hedge a portfolio against a downside move in the market will likely have sold Apple either directly or indirectly when they put that trade on. Apple stock fell by 8.82% over the last week. That despite an upbeat assessment of the prospects for Apple payments from JP Morgan, which see revenue from the service quadrupling to $4 billion by 2026 in an addressable market currently valued at $30 billion per annum. Amazon fell 10.75% last week and is now down by some 63% year to date. The sharp fall in the stock price reflects the concern about the health of the U.S. consumer and their ability to keep spending money via the company's e-commerce and fulfillment business. For its part, Amazon is reported to be expanding its retail operations into 5 new countries located in Africa, South America, and Europe, and has also announced a Prime Day sale scheduled for July 12th. The 48-hour event will be open to consumers worldwide and will start at 3 a.m. Eastern Time.